Sichuan earthquake affect China's economy? Is the bear market rally over? And a news roundup. For the past 2 weeks, I've traveled with the Sinomania show crew to one of the most undeveloped and poorest regions of the world, the southern edge of the Caribbean basin, specifically the islands known as the Lesser Antilles. Whereas in ages past, Britain and France vied for remnants of Spain's fated empire, today the islands trade flags between China and Taiwan as American influence wanes. From what I saw, right now Taiwan seems to have the upper hand. I'll have a full report in my next broadcast. To superstition-loving Chinese, an earthquake is an omen of spectacular change. Earlier today, in the mountains northwest of Chengdu, the capital of Sichuan province, a 7.9 magnitude earthquake shook the region, with a quake wave so severe it caused moderate earthquakes all over central and north China, including Beijing. The death toll is huge and climbing, and the damage has yet to be assessed. The quake is the strongest since the massive Tangshan earthquake in 1976 that preceded by weeks the death of Chairman Mao. Then, hundreds of thousands perished and a middle-sized Chinese city was shaken to complete ruin. The damage today in areas close to the epicenter is extreme, but the absence of widespread building collapse in Chengdu is a testament to the improved quality of Chinese buildings since the Tangshan disaster. Here are some details on the impact of the quake on China's economy. Communications and transport in southwest China are impacted. China Mobile says around 2,000 mobile base stations were affected and cell phone communications all but died for much of today. PetroChina is assessing damage to gas fields and pipelines. Over 20% of China's gas is produced in Sichuan province. China Eastern cut air service to the region, and Chinese state railways were suspended with reports of bridges destroyed. Toyota temporarily shut its plant in Chengdu that manufactures Prada SUVs and minibuses. China State Grid Corp says 5 power plants were disconnected, and trading of shares in Sichuan-based companies may be temporarily suspended in Shanghai. Overall, however, the biggest impact will be on inflation due to supply disruptions, and with inflation running very high, 8.5% in April, that could be the worst aftershock for Beijing. After months of hints and vague promises, Beijing rescued Chinese shares at the end of last month by reducing the duty on stock trading back to levels before last May's increase to curb short-term speculation and reduce volatility. The action was enough to spark a bear market rally that brought the major indexes back up to what some observers claim are sustainable levels given current earnings and performance. The Shanghai Composite Index closed today at 3,626.98, up a fraction. The CSI 300 index closed May 12th at 3,904.92, but remains down 34% from its peak last October. B shares were down. Shanghai B's closed at 257.83, and Shenzhen B's shares are at 560. Major indexes on Taiwan and in Hong Kong also rallied back to healthy levels, but are down moderately at the start of this week. To date, the Chinese domestic stock market has lost almost $1.25 trillion in value since the start of the year. In Shanghai today, the China Commercial Aircraft Company opened its doors. Anticipated since last year, the company is a big step in the development of China's aerospace industry, with plans to build large passenger and cargo jet planes entirely Chinese-made by 2020. The company is initially capitalized at almost $4 billion to fund its development effort. The shareholders are the state-owned Assets Supervision and Administration Commission, holding the biggest stake, and a new conglomerate formed by Shanghai's municipal government and aerospace heavyweights AVIC 1 and AVIC 2. The possibility of a future share offering was not discussed. This is a major potential blow to Airbus and Boeing, the current market leaders. Boeing in particular will be affected in the long term, as its business model for years is based on sales to China. Shares of the company were down sharply in the morning but recovered by late afternoon. Perhaps coincidentally, the new president of the American Institute of Aeronautics and Astronautics, George Mueller, released today a report calling for a repeal of the restrictions imposed a decade ago on aerospace exporters after the Cox Committee alleged but never found evidence that U.S. sensitive technology had been sold to China. The association says the export restrictions have eroded market share for American companies. The Chinese-made jets are intended for domestic sale, but there is speculation China may market them in Africa. The first state visit by a Chinese president in a decade to Tokyo led to a joint agreement for cooperation between Japan and China, including a possible end to disputes over the gas and oil riches of the East China Sea. Discussions between Hu Jintao and Japanese Prime Minister Fukuda revealed the two sides may agree to jointly develop the gas and oil of the Shirakawa gas field and other disputed areas. Finally, Microsoft announced last week it will invest over $250 million on a research and development center in Beijing with a staff of 3,000 within 3 to 5 years. Thanks for watching, and I'll see you next time on the Sinomania Show.